Good afternoon, everyone. Today I'm chatting with Florian Grummes from the Midas Touch newsletter. In today's interview, we talk about the gold market, what's been driving it, and where Florian thinks it could be heading. All right, everybody, enjoy the conversation. Florian, it's good to see you again.
Thanks for having me. It's a pleasure to be back.
Since we last spoke, the price of gold has had a pretty good few months on the whole of things. The last time we spoke, it was trading just under $3,000 an ounce. It's
Great.
been in that $3,300 to $3,400 range since. Now, you do a lot of commentary on the gold market. I'm curious what's going through your head right now when you think about the gold market.
Well, we are in this sideways consolidation basically since end of April, 4 months. Gold has been going nowhere overall, but at the same time, you can make a bullish case out of it because it has been holding up really well, right? You mentioned the big rally. Gold has been rallying from this triple low at 1615 nearly 3 years ago up to a new all-time high at 3,500 end of April. It's a massive move, nearly 100% move. And especially, of course, that rally since the breakout above 2075 February last year. So it's totally healthy and normal that it's been consolidating, digesting that big move since end of April. But at the same time, given that big run up, you would have maybe expected, or at least would have said maybe we've seen a little bit bigger of a pullback, but that hasn't happened. Gold has been holding up really well here. And I think you can see it anytime it dipped below 3,300, 3,250 ish, immediately big new buyers stepped in, and quickly a few days later, gold had returned and challenged again that resistance level at 3,400. So I think overall, still sideways. We are in a summer doldrums situation right now here, mid of August, tight trading range. But overall, I think it's bullish. I think it's just a question of time until this rally will continue. So just a little bit be a bit patient here, I would guess say.
Now, when you think about the macro perspective of what's happening around the world, we started out since we last spoke. Elon Musk was involved with the White House. They were really trying to slash the budget. That obviously never happened. And we look sort of at Trump putting pressure on Jerome Powell to lower rates, at some points even threatening to fire him. And I just kind of look around what's happening with the rest of the world in terms of central banking. It's the same story, but it does feel like things have sort of picked up in terms of governments just throwing their hands up and saying, let's just spend as much as we want and print as much money as we need to. And that is starting to come home to roost in terms of the generalist and the general public starting to ask questions about how much longer is this all sustainable. Do you, do you think that that's an accurate assessment, or do you think that the last few months are just the same as it's always been?
I think it's a very accurate assessment because, look, I'm right now here in Germany coming to you, and the German government took out the big bazooka earlier that year when they announced a big trillion debt package here, just, to finance war and buy weapons and a few other infrastructure projects. And at the same time, the complaints here in Germany about rising prices at the grocery are constant. So it's exactly that what basically the cracker boom describes. On the one hand, governments, central banks devaluating the fiat currencies by printing more and more currency out of thin air, and at the same time, slowly but surely, the population, the people waking up to the fact that yeah, they're losing purchasing power. And that game is continuing worldwide. You see it in America, you see it in Canada, you see it in China, even. And of course, you also in the Eurozone, where they have already lowered interest rates since I think half a year already. So, this is the main driver for the gold rally in the end of the day. We have, of course, in the short term, these peace negotiations in Ukraine. I think it's not a secret that there is a certain war premium in the gold price that has been building over the last 3 years. But then again, at the same time, the points that we just mentioned will bring in new buying immediately once you see a little bit of a pullback here. And the central banks in the emerging markets in Asia continue to buy. And I think also big money in the Western countries now is buying any pullback because it's very obvious gold is in a bull market and your job is to buy the dip. So anytime we see a little bit of a pullback here in gold, I think new buyers will step in.
And we're definitely noticing it here on our YouTube channel where we cover the equity side of gold producers,
Right,
covering the earnings cycle. It's incredible when we compare this last earnings cycle. So if we look at Q2 of 2025 versus Q2 of 2024, just the jumps we're seeing in operating cash flow, free cash flow, EBITDA, you name it. Many of these companies are actually now going out and they're getting their lower grade gold because they view it as an opportunity to maybe go and get some of that
right.
less valuable material and start mining that. And they're still hitting their numbers completely out of the ballpark. And I think that the one thing that I really do wonder about is at what point are we going to start to see really that shift happen with the general equity investor where they really want to start hopping into gold names. So I'm curious if you have any thoughts on that of what it's going to take for us to start to see that sort of massive gold bull market that you'd expect to happen on the equity side, or if you think that that's already percolating and it's already here.
I think it's happening already to a certain extent. I mean, uh, the generalist kind of value investor is already aware of what's going on in the gold sector and with especially the gold producers at these high gold prices. And you can see at the same time, like, look, all these financings the last few weeks and months. I mean, most of them not only got completely sold, but also they doubled the size, right? I mean, we haven't seen that in that extent for a long, long, long time. And usually in the past, it used to be a sign of like, oh, be a little bit careful and cautious. Usually that is signaling a top, but we see actually the opposite here. I mean, the mining stocks holding up really well, some of them making new highs. Gold is holding up well. And I think it's still just rather the beginning. And if we really zoom out, and for example, you look at the TSXV, over the last 20-25 years. I mean, we are far way below that all-time high from 2007 before the financial crisis, when the Toronto venture mining stocks topped out back then. So I think there's still a long way to go. We haven't seen any takeover frenzy in the sector. We haven't seen silver going vertical. I mean, there's so much good stuff still to come down the road, I think. I don't think we have to be worried here about a big top and a turn in the market. A few weeks, a few months of more sideways consolidation and one nasty pullback to shake off all the weekends. Yeah, that's always possible, right? But I don't think that this bull market is anywhere near its end. So it's looking pretty good here.
It's kind of funny how it happened, isn't it? When you think back to 2019 and into the pandemic, when all of the big money printing really started, and we could talk about how under Trump's last year prior to the pandemic relief stimulus starting, the U.S. was running deficits of like 700 billion. Then they cranked them up to nearly 2 trillion and they haven't looked back since. They haven't really brought those deficits back. And then we also look at what's happened with the price of gold over that time. And I mean, I remember when the pandemic first started and the stimulus packages first started coming in, Bank of America came out with a $3,000 price target. Everybody thought they were crazy. They ultimately reeled that back to $2,000. And it was kind of like we sort of ripped from that $1,500 range up to $2,100. And then like a year and a half later, we were kind of back to where we started almost at certain points anyway, some of the lows. And now here we are sitting above $3,000. And it feels like there's less naysayers and there's less noise at 3,300 than there was when we hit 2,000 back in 2020.
Yeah, I mean, from a sentiment perspective, it's a very interesting rally, I would say, over the last 1.5 years. Most of the time, it never really hit mainstream, right? I mean, it kept rising, it kept outperforming, even outperformed Bitcoin to a certain extent. Yet you never really see that euphoria that I remember from that early bull run in 2001 to 2011, simply because I assume there's so many other options, and investors are so distracted with tech, with AI, with all these kind of things. We've seen, like, if you look at the classical kind of sentiment index, I use the optics from Sentiment Trader. You've seen some sentiment peaks, but it never felt like the headlines flying around your head and talking only about gold. So it still feels like rather muted, and like there's no real interest. I mean, you could you we also, it was very clear that the main part of that rally has been made in the physical gold market in Shanghai and in China. And only rather recently, in the last 6 to 9 months, you've seen ETFs in the Western world slowly but surely starting to buy. But they're far away from any holdings that we've seen at peak gold in 2011, for example. So I think there's still a lot of room.
I have to ask this question just because my producer Chris is going to kill me if I don't. But do you have any guidance, or actually, guidance isn't the right word? Do you have any general targets or areas that you've said that you think that gold might trade at over the next couple of years?
Oh, sure. I mean, look, if you take out this, or if once gold can rally above 3,450, I think we very quickly going to test that all-time high at 3,500, give or take a few days, a few weeks back and forth, but it will break out above 3,500. Next round number is 4,000. I think since we are in uncharted territory, you need to use these big round psychological numbers as next targets. So 4,000, 5,000 is very obvious to me, and that can happen rather quickly. And in the longer run, I'm definitely in the $10,000 gold camp. It's just a question of time, right? So this can happen in. I mean, if this is a classical bull market, at the end of that bull market, you should see that market doubling in a few weeks, and that will tell you now it's the end. Now it's the time to leave that sector. So that happened in 1980, in January, when gold went from 400 to 800 and something in a few weeks or in a few days. That was the signal. Now this is the grand finale. That's the end of this bull market. So if gold rallies to 5,000, and then in 2 3 years, within a few days or weeks, it doubles, that's telling you, okay, here we are now. Now it's time to leave that sector. But has happened. This has not yet happened, obviously. So we are far away from a real blow off top here, but that will come. Usually, that's what you see in a bull market at the end. And by the way, silver hasn't even showed either. So, I mean, silver is especially supposed to do that kind of crazy stuff at the end, right? Going completely nuts, going completely vertical, and not only doubling, but like rallying maybe 200-300% in half a year, something like this. That will signal us, okay, now total euphoria, total exaggeration in the sector. Everybody's in, all your taxi drivers and grandmas are talking about gold. That's when you want to leave the sector completely. But I don't think we are there yet at all.
If we see silver go on some sort of rapid increase to say $100 an ounce, that's when you think that it's time to start thinking about taking chips off the table.
It really depends on in which type of fashion it's doing it, right? What we're seeing in silver over this spring and summer is strong rally overall, but it's not this vertical spike that you usually have seen in silver in the past, where it suddenly goes totally banana for a few weeks, and then usually that's the end of a rally in the sector. No, it's been creeping higher, digesting, consolidating, and another push higher. Again, a few weeks digestion, sideways consolidation, and then another push higher. Very sustainable, very bullish in the longer run. I think it's telling us that there's much more to come here. So I think that the more it behaves like that, the more likely it is actually to break through that $50 without any big consolidation or correction around that big round number, which is obviously long-term resistance because it's the all-time high, and we've only been 2 times testing this number. But the more it behaves like it's behaving right now, I assume we're gonna go through 50 and then probably rallying directly 60, 75. And in the longer run, yeah, once you see silver really going vertically, doubling, tripling in a very short period of time, that would be the signal for me to be really careful. And at the same time, I would like to see a gold silver ratio maybe at 30 or at 15, ideally. That would tell us like complete euphoria. Okay, now we have to leave the sector. But again, we're far away from that.
All right, Florian, last question for you. If our audience wants more of your commentary, where can they go to?
Well, best is to come to our website, midastouch-consulting.com. We publish weekly in-depth research on gold, silver, and Bitcoin. We also have daily calls on gold and silver. Ideally, you subscribe for free on Substack. And of course, I'm on LinkedIn, on X, and we have a free Telegram channel where lots of sophisticated investors from all over the world exchange their ideas and takes on the markets about gold, silver, mining stocks, commodities, and also about the digital assets.
All right. Well, Florian, thanks so much for hopping on here. Every time we have you on, gold seems to go up $300 or $400. So let's do this again as we approach $4,000.
Oh, good pleasure. Okay, thank you very much. Thanks for having me. I appreciate it.
All right, everybody. Thank you for watching. If you enjoyed this conversation, do me a favor, smash that like button, subscribe, and ring that notification bell. Also, guys, if you want more mining content, check out our website over at thedeepdive.ca. All right, everybody. Thanks for watching.